Welcome to our another exciting episode of Max Homes Real Estate. Welcome.
Welcome. Thanks a lot for all the support that we received for our
Yes.
first video, and we are excited to bring more data with respect to real estate market trends.
Right.
But in this video, we are having an exciting section today that is being added.
Yes, so we have added the mortgage rates as well that we received, the information that we received from our mortgage brokers that we have relationship with. So we have added that section along with the major headlines that impacts the real estate market, the data in the real estate based out of TRREB, and
The weekly data
the weekly data
and the ground reality.
and the ground reality. Yes.
Cool. So let's get started with our first section, which is nothing but the news and the major headlines for the last 2 weeks.
Exactly. So the major headlines that we had is Canada's GDP grew by just 1%, merely escaping a recession, which was a surprise to everybody, because in spite of being interest rate being high and everybody feeling the pain of high interest rate, our GDP grew by 1%. Which is something that that Bank of America, not Bank of Canada,
Yep.
Bank of Canada is excited because they can hold on to their rates because they can get more control of the inflation.
Yeah. So basically, we have more immigration, resilient economy,
Yeah.
and everything is getting added to the GDP data that we have
Yeah.
for the last quarter.
Yes.
So what does it imply for the interest rate?
What it implies is there might not be any immediate rate cuts in the near horizon. I think the next announcement is in May.
Yeah. Sorry, I think it's on April 8th.
April 10th.
Yeah, April
Yeah,
10th.
sorry,
Yeah,
thanks
yeah.
for correcting.
Yeah.
April 10th, and then we don't anticipate any major rate cuts until June is what we are speculating.
Okay.
But it depends upon how our market performs in the next few months.
Yeah, we will continue to track the data that
Right.
we have that's coming for the next a month or two, which is crucial for Bank of Canada to make a decision on interest rate.
Right. And one point on the interest rate is if our economy didn't grow positive, for example, in the last 2 quarters, if our growth is negative, that means we are headed to a recession. If that's the case, Bank of Canada will be forced to cut the interest rate because they can't afford to take the economy into a recession. They would want to stimulate the economy back by cutting the rates.
Yeah.
So that is one of the major headlines.
Okay. So any other headlines?
Yeah, the other major headline is the Toronto's home sale price in February grew by staggering 17% compared to last year.
The sales, right?
Sales.
Yeah, sales. Okay.
Yeah. So that means there is a lot of momentum happening in the market, in the real estate market. We will deep dive into the exact numbers in our next section shortly.
Okay.
So definitely the sales grew. That's one of the major point to highlight.
Right.
And then with respect to the Bank of Canada's interest rate announcement on March 6th, they held the rate, which
Yeah.
was pretty much what we anticipated.
Yeah. Right.
Because inflation is still at 2.9, and that is not anywhere close to their target.
Yeah.
They wanted to be somewhere near 2.
Right.
Meanwhile, that is a major factor. So we anticipate them to hold the rate steady.
Yeah, and the communication is also important, right?
Yes.
Where they say that it is too early to start talking about the rate cuts. So we are not anticipating for sure any changes in the next announcement, which is happening on April 10th.
Right.
But still, I think the market is, speculating that the rate cut may start happening in the month of June.
Yes.
Right?
Yeah.
Okay. So I think as we said before, we will continue to monitor the data as it comes through, and we will see how the things are going.
Correct.
Yeah.
Yeah.
Okay. So that was any other major headlines that we wanted to talk here?
No, I think that's pretty much
Pretty
it.
much we have, right?
Yeah.
Okay. So I think then we can move to the next section where we can talk about the data, the actual data.
Yeah.
So I think we can start it with the TRREB monthly release that
Yes.
happened for the month of Feb.
Yes. So TRREB released their February data. So if you deep dive into the numbers, what we see here is year over year in February, the sales has spiked 17.9% compared to last year with respect to the sales of the residential homes. And also the average sale price is also a slight increase, about 1.1% increase in the average sale price. Right now we are at 1.108 million for a average selling price for a detached home.
Okay.
And with respect to new listings, year over year, there is a 33.5% increase in the new listing compared to last year.
Yep.
And also, if you see the sales to new listing ratio, it is declined negative 7% compared to last year.
Okay.
We are at 49%. Basically, that shows that we are in a balanced market here in GTA.
Okay. Okay. I think that is pretty much aligning what we are tracking
Yes.
weekly, right?
Exactly.
In our channel.
Yeah.
So yeah, that is too good to see.
Yes.
It's aligning the data. Yeah.
Okay, so next we look at the weekly data trend in our GTA real estate market.
Okay, so we look at the data for week ending 9th March. So if you see the graph and the data that is being highlighted for the week ending March 9th, we had active listings of 13K 333. So that is the active listings that we have. So if you see at in the last week, we had 12K 570 listings, and which is an increase of in and around 800 active listings. And if you look at the new listings, we are currently at 3116. And in compared to the last week, it is just a change of 100 or 200, which is not significant, but it's we can safely say that more listings are coming into the market on a weekly basis. And if you see the sales figure, we are currently at we were at 1561 sales for the last week, and which is again pretty much in par with the sales happening for the last couple of weeks, which is in and around the 1500 range. So basically what we are seeing is as per at least per the data, the things are moving, the market is moving, we are getting more listings, but at the same time we are having more sales. So it looks kind of a healthy market, but we will get to know from the Max what is happening in the ground, what is the ground reality.
So in the ground reality, when we go to the open house and showings, there is a lot of traffic. The spring market, there's more traffic coming into the showings.
Okay.
More people are registering offers. We can see scenarios of multiple offers people, against properties.
Okay.
Basically, there is more momentum and more action happening in the marketplace.
Yeah.
Prices are slowly creeping up with respect to sold properties.
Okay.
Prices are creeping up.
Oh, yeah. Okay, good to know that. I think we can jump into our next section.
Yes.
Which is nothing but the mortgage rates.
Yes. So basically, we included mortgage rates to give a snapshot of our viewers of what's available in the marketplace. The data is derived from the brokers that we have relationship with. So if you look into it, basically we have split into the popular terms, which is 5-year fixed, 5-year variable, 1-year fixed, and 3-year fixed.
Okay.
And this is a rundown only for 4 months from August to March, where there was some changes with respect to the interest rates.
Yeah.
So let's deep dive into it.
Sure.
Now, before we do that, let's explain the 3 types of mortgages we have.
Sure.
We have insured, we have insurable, and we have uninsured.
Okay.
So to help the viewers to break it down, what the difference is, basically any insured mortgage is nothing but if your price of your property that you buy is less than $1 million, and if you are making a down payment less than 20%, your mortgage should be insured through CMHC.
Okay.
That means you have to pay additional insurance premium to ensure that your mortgage is insured. That protects the lender. Now, what is insurable mortgage is nothing but if your property price is less than $1 million,
Okay.
and you are making a down payment of 20% or more, then the lender would make a call whether the mortgage should be insured or not.
Okay.
So there will be that is basically insurable mortgage.
Mortgage. Okay.
And when it comes to uninsurable, basically if your property price is north of $1 million, and that means you have to put at least 20% or more as a down payment.
Right.
That means you don't have to go with insurance. Your mortgage is uninsurable.
Okay.
And that is basically the difference. This is just the high level difference. There are more factors to it, which your mortgage agent would be able to explain it to you in detail.
Yep.
With respect to the kind of amortization you take,
Right.
And other factors.
Okay. Okay. That's a good breakdown. So just to get an idea, like, is there any mortgage rate difference that we see in with respect to insured or insurable or uninsured?
Yes. Let's deep dive into this grid.
Okay.
So if you see the prime rate is at 7.2. Since August
2023, right?
Yeah.
Yeah.
So before I go into that, let me explain what these color coding means.
Okay.
Green means there has been a reduction in the interest rate. Yellow means it's been pretty much stable. Red means there is an increase in the mortgage rate.
Okay.
So as of March 2024. So if you look at the data here from August 2023 to March 2024, if you look at 5-year fixed, there is almost 40 basis points reduction.
Okay.
In the mortgage rates.
Okay.
For 5-year fixed. But if you look at 5-year variable, it's pretty much no change. It's pretty much prime minus 0.95 and prime minus 0.45 with respect to
the previous month, right?
Right.
Okay. Okay.
And if you see 1-year fixed, basically the insured has been pretty stable, but for insurable and uninsurable, the interest rate went up by a few basis points.
Okay.
And for 3-year fixed, it's pretty much the same.
Same. Okay.
Yeah.
So I think from the grid itself, I think it's easy to find out that the insured mortgage rate is always a little lower end, right? When compared to uninsurable.
Correct. Because when you have an insurance, it protects the lenders. So that means the risk is low. So they can afford to take pay lower interest.
Lower interest. Okay. All right. That makes sense.
And then it has a dependency on the yield, bond yield as well.
Yeah, that's right. So we have been tracking in our videos. We have been tracking the Bank of Canada's rate decisions, which is a direct impact on the variable rates. But the fixed rates are depending on the bond yields.
Correct.
So basically, if you follow the 5-year Canadian government bond yield, you would pretty much track where is the fixed or the 5-year fixed rates going.
Right.
So fixed rates are totally depending on the bond yield. So we can track it off.
Yeah.
Yeah. So yeah, that was a pretty much good view on what are the different rates that are available.
Right.
I think it's again based on the personal financial risk and what exactly the rates that you are eligible for. But this is kind of a direction to everyone, right? Where the rates.
This is just a high level view. Yeah. What rate you get will depend on your risk, because it will be people to people depending upon your credit score.
Right.
Your a lot of other factors depending upon you, which your mortgage agent will help you.
Yep.
Based on this rates, if you want to get more information, or if any rates look attractive to you, or you want to get more information, reach out to us.
Sure.
We will hook you up with the mortgage agents that we work with, and you can get your exact exact rates that you are eligible and what kind of mortgage eligible based on your respective scenarios.
Yep. Okay. So yeah, that was a good breakdown. So I think we covered what we wanted to cover, right?
Yes, yes. So that was a good wrap up. We covered pretty much what we wanted to cover and also covered the mortgage rate.
Yep.
So we will be excited to bring you more information.
Right.
We'll be tracking the real estate data and bring you more information in our next episodes.
Yep.
Yeah, meanwhile, if you have any questions, comments, please let us know. We'll be happy to answer that. Please don't forget to like and subscribe our channel, share it with your family and friends.
Yep.
Okay, so see you soon in our next video. This is Max Thomas.
This is Rinson Matthews.
Stay safe.